Hi everyone. In this video, I will explain on the flow of cost in a job costing system. So this is a summary of the cost flow where we start with work in process to finished goods inventory to cost of goods sold. By looking at this cost flow, you will be exposed to four main things. First is the link between cost, balance sheet, and income statement information. Second is with regards to double entry recording. Third is on the preparation of schedule of cost of goods manufactured. And fourth is the preparation of schedule of cost of goods sold. So this is how the cost flow looks like, where basically it starts with cost information. Some of the costs will become product cost, while some would be period cost. The costs that become assets, such as raw material, work in process, and finished goods, will be parked under balance sheet. So when the products are sold, they would be parked under income statement as cost of goods sold. Period cost like sales and admin costs will be parked under income statement given that they are incurred to generate profit. Now let's look at the double entry recording. We start with raw material. So raw materials that were purchased by credit for production will be recorded in the raw material inventory account. So you debit raw material inventory account, credit accounts payable. Consequently, the raw materials that are used in production will be recorded in the work in process inventory account. You debit work in process inventory account and credit raw materials inventory account. At the end of the financial year, the balance in the raw material inventory account is reflected in the balance sheet under asset. So the next one is direct labor. The direct labor cost involved in production will be recorded in the work in process inventory account. You debit work in process inventory account and you credit salary payable account. The next one is manufacturing overhead. So the recording of manufacturing overhead is a little bit more complicated as it involves the recording of both actual and applied amount of the manufacturing overhead account. So the actual amount incurred for manufacturing overhead is recorded as debit manufacturing overhead account, credit accounts payable. So these accounts payable can be any specific related overhead accounts, yeah? And then the applied amount of manufacturing overhead is recorded as debit work in process inventory account and credit manufacturing overhead account. So you can see here, one is the actual amount, okay, on the debit side, whereas the credit side is the applied amount. So a little bit of explanation on what is work in process. Work in process inventory consists of goods that are partially completed. At the end of the financial year, the balance brought forward in the work in process inventory is reflected in the balance sheet under asset. So the next one is the finished goods inventory. Once the goods are completed, they will be sent into the store and identified as finished goods. Here, the recording will be debit finished goods inventory account and credit work in process inventory account. At the end of the financial year, the balance in the finished goods inventory account is reflected in the balance sheet under asset. The next one is cost of goods sold. The cost of goods sold refers to the finished goods value that are being sold to the customers. When sales of goods happen, its cost amount, which is cost of goods sold, is reflected in the income statement. Here, the recording will be as follows. Debit cost of goods sold and credit finished goods inventory. And a little bit about cost of goods sold just now. The balancing amount in the cost of goods sold account would be sent to income statement, and other selling and admin expenses, which are the period costs, are also included in the income statement. And starting on that point, you can start calculating the profit amount in the income statement. Now, let's look at this schedule known as cost of goods manufactured schedule. So if you look at this schedule, there are three main elements: direct material, direct labor, and also manufacturing overhead applied amount. Okay, so you get your total manufacturing cost, you add your beginning work in process minus ending work in process, you get your cost of goods manufactured. The next schedule is the cost of goods sold schedule. So here you can see that we have beginning finished goods inventory. You add with the cost of goods manufactured, so you will get your cost of goods available, minus ending finished goods inventory, you get the unadjusted cost of goods sold, and then you do adjustment. So we will look at this adjustment in the next video. So at the end, you get your adjusted cost of goods sold. Okay, that's all for now. Kindly continue with the next video entitled Manufacturing Overhead Adjustment. Thank you.